What's up, everybody? Welcome back to the channel. Today, we're going to be going over a very popular and highly demanded topic within my private students, but also publicly as well. I'm sure a lot of people are asking, what entry models do I use and how do I enter the market? Are there specific entry models we have at Liquid FX? Now, the answer is yes. There's three different entry models we use. Now, I haven't got any names for them specifically. I'm just going to refer to them as model 1, 2, and 3. But really, these models all rely on the power of three. So they rely on ICT concepts, right? So power of three ICT concepts, right? So they all rely on this thing called the AMD, which is the accumulation, manipulation, and distribution. So all three models will rely on that, but they all have different nuances. And we're in this video going to discover what these nuances are in price, okay? So here we have the chart of the E-mini and NASDAQ, so NQ futures market, right? So if I just put up the Asian range first. So we have here the Asian range in price. Now, for this strategy, the Asian range, for this entry model, should I say, the Asian range isn't of interest to us that much. Now, it's important to understand where the end of the Asian range occurs because at the end of the Asian range, we have the New York midnight opening price, and this is at 5 a.m. in the morning UK time, right? This is calibrated to UK time, so this is going to be New York midnight price. So this is essentially New York midnight Eastern Standard Time, right? So why is this time important? So before we dissect the charts and look at a live example on Nasdaq today, so the recording of this is the 30th of January, price action breakdown. We're just going to draw a little schematic at the bottom before we go into it. So what we see over here is we see the Asian range giving us a buildup of liquidity like we've discussed in every video. Now from here, once Asia has accumulated orders and built liquidity, right? So this is going to be an orange and this represents the Asian range. Now, what is the Asian range? Asian range is a low volume time of day that accumulates liquidity, that accumulates orders. Now, the bit which we are interested in with the Asian range is the New York midnight opening price, the New York midnight opening price, and that's at the end of the Asian range over here, right? So this is the end of the Asian range. So if I mark that up so people can understand, what this is the dashed line, dotted line. This is the New York midnight opening price. New York midnight opening price. So New York midnight opening price. And as I've said, this is New York midnight time. Now, the reason why this is important is because we look for manipulation around this New York opening price. And this is how we do it, right? We essentially want to see price trade up, sweeping this data point before we can look for potential sells in a bearish example. So we're going to be looking at a bearish example over here. And if you were looking for a bullish example, you would simply flip it on its head. So what we want to see is we want to see price action give us. So if this is the New York midnight opening price over here, we would want to see price manipulate higher before giving us a break of structure, right? And our job is to enter off a fair value gap, right? And that's essentially how we trade. This is entry model number one, right? So this is model number one. It can be referred to as the New York opening midnight entry model or whatever you want to call it, really. So New York opening midnight price entry model. This is model number one. So what we're seeing here is we're seeing a clear manipulation of price above the Asian high. Now, this is very important to understand. It's not the Asian high, sorry, the New York midnight opening price. This is very important to understand, okay? So we are looking for our manipulation in price over here. Now, this corresponds to the New York midnight opening price. So this will be the New York midnight opening price over here in the horizontal line. And our manipulation is essentially above this. So this is going to be the manipulation in yellow, okay? So if I label that manipulation. So what we're seeing over here is we're seeing price accumulate, manipulate above the New York midnight opening price, and then distribute lower. And our job is to simply sell off a fair value gap that's been produced. So an OTE or similar to the ICT 2022 model, we're looking for a breaker or an OB or an OTE after we see a break of structure. Very important. A break of structure is what confirms the shift in direction. Very important to understand that in all entry models, right? So this is our first entry model over here. So the key thing to understand is it is a manipulation of the New York midnight opening price. So if we go onto the charts over here, we can begin to see where this occurred in price. So we have our New York midnight opening price. If I get rid of the Asian range to make it easier, our New York midnight opening price was just over here. So that's 5 a.m. UK time. And as you can see, if I label that and just zoom into price, we had our New York midnight opening price get very clearly manipulated during the London session over here. So this is the London session. This is our manipulation, okay? Okay, very clear manipulation in price, okay? So this occurs above the New York midnight opening price in line with our first schematic over here. So our schematic over here was to look for a sell after we see price manipulate the New York midnight opening price. And this is what we've seen over here. Now, what do we look for? Well, we look for a break of structure. This is exactly what we have in this region. So we see a very clear structural break just over here. Now, our job as a trader is to enter off the fair value gap in the New York session. So there's two potential entries over here. Here's one fair value gap. So if I zoom in price, we see a fair value gap over here. So this is one fair value gap candle just over here. So a safe place to put your stop loss will be above this large wick over here. So that will be your first entry. And there's actually a second fair value gap that occurs just over here. So this is in the New York Silver Bullet AM session. Okay, so the AM session, and a safe place to put your stop loss will be just over here. And this was a great trade here on N, giving us a 1 to 3, I believe, or 1 to 3 or 1 to 4, simply using this model over here. And the key thing to understand is that we're looking for a manipulation of price above the New York midnight opening price, and that's what we've seen just over here, delineated with the line over here representing the data point in price, and London giving us the manipulation. The manipulation can occur in London or New York, typically in either, right? So it can happen in London or New York. So it's that can be either or, and it's our job to understand that it has happened, and we can look for a sell off the next fair value gap after a clear break of structure. So this is our first entry model over here. Now, our second entry model, for that, we're going to have to go back in price, just looking for a good example that we can use and share. So with this, we have to go back because NQ has been ranging because we're in a sort of an all-time high correction period. But our next entry model is we're going to dissect a bullish example. So if I go back in price, where were we? Here we are. So if we go back to the 9th of this month, so NQ has given us some pretty good trades. At the start of this year, at the start of this month and at the start of this year, we were pretty much bullish, okay? And here's an example of how you can get in using our second entry model, right? So this is our second entry model. So entry model 1 doesn't really utilize Asian range high or low. The next two models do. And here's how we can get in using the Asian range, okay? So this is an Asian range entry model, AMD or ICT strategy. And here's how we do it. Okay, so first you can see in price we have the Asian range over here. So the Asian range has one purpose, right? The Asian range looks to accumulate liquidity, right? Looks to accumulate orders. So what we see over here is we see the Asian range marked out in orange, and this is the accumulation of the AMD, right? So this builds liquidity, right? This is something that builds liquidity. This is the session that builds liquidity. Now from here, what does our entry model look like? Well, from here, our entry model is similar to the first entry model, but here we're going to be using the Asian range low. So what we see is we see price accumulate in the form of the Asian range, like I've just marked out. Then what we see is we see price head down, sweeping the Asian low, and then giving us a very clear shift in market structure. And we enter off the fair value gap or the breaker, right? So if I just label this, if I just label the schematic first, in terms of the fact that we have our accumulation, which is going to be in orange. The accumulation is the Asian range, always the Asian range. We have a manipulation in price over here, and this is the Judah swing or the turtle soup. They all just mean the same thing, or simply just the manipulation of price, right? It's the M in the AMD model. So this is the manipulation or the Judah swing. If I can spell manipulation, manipulation over here, or the Judah swing, they literally mean the same thing. Now from here, we want to see a clear shift of market structure, just like our first entry model, okay? So we want to see a shift in the market structure, and we see that just over here. So this is our second entry model. This is when price sweeps the Asian low, and as traders, we want to target the Asian high. So we have that in mind. Okay, so we've seen a sweep of the Asian low with the manipulation, right? This manipulation has swept the Asian low. We target now the Asian high as a minimum RR, the Asian high. And this is how we can do that in price, right? This is a trade that was taken on the S&P 500. So I didn't catch it on NASDAQ, but I catched it on the S&P. And here's how we did it. So we had the Asian range come down. And what we've seen is we've seen a very clear downwards intraday M5 structural range, right? We see price giving us lows and highs and lows and highs and lows. And then we had a shift of market structure. We had an interruption to structure, right? We had an MSS or a BOS, whatever you want to call it. They literally mean the same thing. So we had our break of structure over here. We prefer to call it a break of structure at Liquid FX. So this is our break of structure marked out with the arrow over here. And our job is to enter off the fair value gap, right? So we had a fair value gap candle over here, and we enter off this fair value gap, okay? Now, a safe place to put your stop loss is below any inefficiencies in price. So our last imbalance was in this region. So a safe place to put your stop loss would be just below this wick over here because there's no inefficiencies over here. There's a less likely chance of price reaching there because it doesn't have to refill any orders there. Okay, so with that being said, our place to target, our minimum place to target will be the Asian high, as the model suggests. Okay, so this is essentially looking for a Judah swing with the sweep of the Asian high. And the same thing would be true if we were in a bearish model. You would simply flip it on its head and look for manipulation above the Asian range. This is a bullish example, so we look for the manipulation below the Asian range. So if I just zoom out in price, and you can see exactly how the schematic and the price action lines up with each other, okay? This is how we do it. So we want to look for an Asian range. We want to look for an accumulation in the Asian range. We want to look for a manipulation in price as we go down lower and we enter off a fair value gap after a break of structure. This is entry model number 2. Now, entry model number 3 is another trade that was taken on euro dollar earlier in the month, I believe. So if I just go back and find that trade, the markets were ranging to start this year. So this was a really good high probability setup that I actually remember taking on EU, on euro dollar, should I say, not EU, euro dollar. So if I were to go back in price, where was it? I believe it was the 15th of January. So if I just dig through the price action, we can go through our third and final model, which also incorporates Asian range low and high, but this is a little bit of a sophisticated model because it manipulates both the Asian range high and low together. And here's how it does it. So we start off exactly the same way. This is entry model number 3. This is the third entry model. We start off the same way by accumulating orders via the Asian range. Now, this is a bearish example we're going over again. So what we see first, we want to see price manipulate the Asian low, i.e. sweep the Asian low. And we're going to see that with an aggressive move lower. Okay, this is what we see over here. We see price giving us that aggressive move lower. Now, if price is going to go bearish, if price, the higher time frame narrative was bearish over here, so if price does want to go bearish, if price wants to seek lower, if price wants to seek lower prices, right, price is going to do two things: manipulate price, manipulate people in both sides of the market before we head the other direction, right? So we're going to see a sweep of the Asian low, then we're going to see a sweep of the Asian high. This is our third model. And then we see a break of structure over here. We enter off the fair value gap over here. So it's similar to entry model number 2, but it does have its slight difference because there's essentially two manipulations, whereas the entry model we looked at before only had one manipulation. We swept the Asian low, then we targeted the Asian high. Here we're seeing two sweeps of the high and the low before the real move occurs. So let's label this up and see what we mean. So here we have the accumulation, which is the Asian range over here. This is the Asian range. So this is the accumulation of the AMD. Now we see what I call manipulation phase 1. This is manipulation phase 1, okay? This is not the Judas swing. This is manipulation phase 1, okay? Manipulation phase 1. Now, what do you think the purpose of this is? The purpose of this is to entice early sellers into the market. So we see a rush of uninformed, unimpatient traders getting involved in the market. This is classic interbank price delivery algorithm manipulations and timing taking place in the market, right? Typically, this will occur in the London session, and you'll get this manipulation phase 2, or i.e. the Judah swing, the high of the day, occurring in the New York session, right? So our Judah swing is essentially going to be above the Asian high, right? After we swept the Asian low. So this is manipulation phase 2. Manipulation phase 2, as we call it in liquid FX, or it is more commonly known as the Judah swing, right? The high of the day in a bearish market. Perfect. Now from here again, as normal, we enter off, we need to see a break of structure and we enter off a fair value gap, similar to the 2022 model. and we target the low of the day because this is the liquidity point over, this is the liquidity pool, okay? So to go over this model one more time, we have an Asian range which accumulates price. We see typically the London session give us manipulation phase one. So this entices early sellers into the market. So let's just label that down here. Early sellers, early sellers enticed into the market, right? Now, what do you think happens in this move over here? This move over here. Those early sellers are pretty much stopped out the market, right? And buyers are enticed. So early sellers are smoked, right? Early sellers are manipulated out of the market. Early sellers are manipulated out, and we see a rush of buyers coming in. Now, with the real move in line with the higher time frame narrative, the distribution lower in the AMD model will swipe out all these buyers into the market, right? And we enter off a fair value gap. So let's see how price actually delivered this. Again, this was probably the best trade setup on euro dollar in the whole month, actually. So again, we had the Asian range to begin. Now we see an aggressive sharp move down. And this is going to be the manipulation phase one, just over here. So this is a manipulation phase one. Now we see manipulation phase two, right? Because we see price giving us a series of highs and lows, and highs and lows and highs. Now we've got that break of structure. So if we just follow our market structure over here, basic market structure rules, we want to see two candles for a pullback every single time, and we enter off a fair value gap. It's as simple as that. So now that we have a break of structure in this region over here, that's going to be our boss. Now we have a fair value gap to enter off over here, and this fair value gap gave us a nice trade. So your stop loss essentially wants to be above the Judas swing. So this is our manipulation phase two, right? So this is our Judas swing or manipulation phase two, just like our entry model down here we discussed. This is the third and final entry model, probably the most complex of the three, but it isn't too difficult to understand. Manipulation phase one, manipulation phase two, and off we go, right? And this trade was a monster, giving us a thing of 1 to 10 or 1 to 20, whatever it was, all the way down. It really had some follow through because we were in line with the higher time frame narrative. And that's very important to understand. So we saw price just melt off in the next few days and weeks ahead. And this is because the entry model on the lower time frame complemented the higher time frame narrative. So if you like this video of entry models, please give it a like, give it a thumbs up, and I look forward to seeing all of you in the next video. Just a quick shout out to those who made it to the end of the video. Liquid FX is offering free one-to-one sessions for only £35 a month in the private Discord community. So if you're interested, drop me a DM on Twitter or Instagram or YouTube, and I'll be more than happy to get back to you to see if it's a good fit. Until then, see you in the next one.